The subprime mortgage crisis was the result of a series of events that led to a serious depression in the US economy and arguably sparked the EU crises which we find ourselves in at this very moment. The subprime mortgage crisis had basically come into place because of subprime mortgage loans. Initially, houses would be sold using prime mortgages. In order to take a prime mortgage, one would have to qualify by having a good credit score. This could be achieved by, for example, punctual loan repayments. If one's credit score would be bad by, for example, not paying your loans on time, then one could only be granted a subprime mortgage. In other words, people who are allowed to take prime mortgages are considered safe, both because of the fact that they have a good credit score, judging by their past, but also from the perspective of the lender. Thus, the interest rate of the loan would be lower. On the other side are the ones who take subprime loans. Since these people have a lower credibility, the interest rate will have to be higher from the perspective of the lender in order for them to maintain their security. Another difference between the two is that prime mortgages include something called a down payment. A down payment is an initial amount of money that is paid at the time of a purchase of the house. Subprime mortgages, however, do not include any down payment. Thus, they are even more unreliable. So what conclusion can you come to? Subprime mortgages are for people with low credibility, yet have higher interest rates and no down payments. The credibility of the people paying their loans back do not seem high at all. Now, this is exactly what happened. More and more people would take subprime loans and could not pay back. Once this happened, house prices started to drop. By this time, people who took prime mortgages were wondering why they were still paying high amounts of money when in reality their house was worth much less than they were paying. By this time, investment banks had a hard time finding investors for their collateralized debt obligations. After a while, each sector of the system knocked down the other, one at a time, resulting in a financial crisis. So assuming that the economy is built out of groups and functions as a group, everything works just like an engine. Individual components will all contribute towards the common goal, yet will not function without each other. So without banks, the circulation of money will halt, and the growth of an economy will stop. But how come nobody did anything about the problem? Surely there are hardworking economists who can foresee things like this. Then why did nobody stop it before it happened? The theory of operant conditioning, which was arguably pioneered by the famous behaviorist B.F. Skinner, can be defined as a type of learning in which an individual's behavior is modified by its consequences. Now, keeping this in mind, let's try to define and identify the actual groups which are mentioned here. Taking a look at investment banks and trying to identify them, I will be using the theory of group dynamics, which usually states that a group has both a formal purpose and an informal purpose. Now, the formal purpose is an official stated purpose of a group. Now, in the case of investment banks, the official formal purpose would be to allocate people with loans, whether it's a subprime mortgage or a prime mortgage. The informal purpose, however, would be the opposite, which in this case is for the workers to make money, whether it is a small worker for the investment bank or if it is the owner of the investment bank. Together, one of their goals is to make money and to make a living for themselves. Looking back at operant conditioning, which was once again, and I quote, a type of learning in which an individual's behavior is modified by its consequences, could serve as a possible explanation to why the crisis was not stopped. Until the crisis, the banks were making tons of money, regardless of what they foresaw. Therefore, the banks would continue to issue subprime mortgages as they would relate their informal purpose of making money to positively rewarding prior events, thus preventing them from reacting towards every warning they received. In fact, one can arguably say that when an informal purpose overrules the formal purpose, we end up with corruption. So were American banks at the time corrupt? The claim sounds plausible and can definitely contribute towards some form of explanation to the decisions that banks made. But there are several other perspectives, such as the evolutionary perspective, where one may include the idea of the survival of the fittest. Now, the combination of the survival of the fittest theory along with the theory of group dynamics is certainly an interesting one. Keeping in mind the previous discussion of whether the moment where an informal purpose overrules a formal purpose is corruption or not is a very interesting one, as the survival of the fittest suggests that perhaps the informal purpose is our true purpose. Therefore, the idea of corruption does not count, as it's our true goal. It's what we are actually striving for. So it's interesting to see how two different perspectives, which, for example, I took behaviorism and evolutionary perspective, and see how they evaluate and identify the subprime mortgage crisis and the group. And in terms of group dynamics, they can identify and evaluate the economy as a whole, the economy as the sectors within the economy, and the individuals within those sectors. And this is not only interesting, but it's also useful in terms of making change and identifying the problem and identifying the need for change. So let me just give an example of the behavioristic approach and how it could be completely different. So the behaviorism in terms of operant conditioning, loans were given out, subprime mortgages were they kept giving them out, even though they made money doing it, so they kept on doing it until they failed, and the economy failed as a whole because of purposes and such. However, in the end, they still failed. Operant conditioning serves as an explanation to why the economy as a whole failed. However, for example, a group such as or perspective such as the evolutionary perspective could see the whole thing as merely human nature. For example, the idea of informal purpose overruling formal purpose is equal to corruption. In this case, informal purpose overruling formal purpose is equal to human nature. It is the survival of the fittest, for example. We can take that. Survival of the fittest. You fight to survive. We're all fish trying to eat the smaller fish in the big ocean, and whoever gets knocked out gets knocked out. And that's sort of more of a neutral view rather than behaviorist. It doesn't motivate for its failure, for the economy's failure as a group. It motivates for, well, it's got a completely different view on the group as a whole. So it's quite interesting to see how these can sort of affect the whole perspective from the basis. Now, it doesn't take a genius to realize that America went through a lot of hardship during the subprime mortgage crisis. So I'd like to see the whole thing as some sort of a failure or some sort of dysfunction within the economy. So therefore, I agree with the behaviorist perspective, which identifies the economy as a failure during the subprime mortgage crisis. So when you identify failure, of course, there must be some sort of solution. So how do we find the solution? Well, let's take a look at other countries. There are many types of groups, and beyond the economy in America as a whole, we have, for example, worldwide economy, which takes place here. In Sweden, for example, where subprime mortgages are illegal and the economy is stable, we can see that we have a well-performing economy. And what can we get from this? What can we understand? What's the solution? Well, once again, operant conditioning. positive rewarding and negative rewarding. In America, what the choices they have made are bad, therefore you should not continue. And in Sweden, the economy is good because they do not have subprime mortgages. Therefore, you should not have subprime mortgages. Um, and therefore, I believe that you shouldn't have subprime mortgages in America, especially because of the reason you can see, and it just leads to, well, because of upward conditioning, it leads to an economic crisis. That's basically what it does. And I believe that if the economy by itself does not solve these problems, it will have to be the job of another group to intervene. For example, the American government. And that's my opinion, and thank you for watching.